So today we're with Angelo Christian. He is a real estate investor, and we're going to learn more about what he's done in his career in real estate and how to get started with real estate for those that are watching the show that would want to get into real estate but don't really know how to get started.
Yeah. Thank you so much, Antoine, for having me on your show. I really appreciate that. I'm very grateful to you and your fans and your audience and everybody. So, I started in the real estate business in 2005. Okay. And I started on the mortgage side of the industry as a mortgage broker. And that's where you're underwriting the customers for their credit, the qualifications to see if they can get approved for the loan. At that time, we were doing subprime mortgages, cash out refinances, hard money type transactions. And you got paid on the points that you charged the customer. And so like if you did a $300,000 loan, you could make, $10,000, for example, for me, that was a lot of money at that time because I grew up very poor on the streets and never made more than $1,000 a month and was basically homeless. I don't know how much you know about my story. So we started on the lending side of the business, really figured out, because see, in real estate, you have to have many things to be successful, and the financing is one of them, right? If you want to go build multifamily or resorts or master plan developments, you have to have the banking in your pocket and know how to package those loans, and they're very complicated. So if you want to be able to have this vision, like you said in the beginning of the conversation, to build out a vast real estate empire, you have to have the banking lined out and figure out where you're going to get these lines of credit, get the funding to close your deals. Because there's many, many different types of funding, and they're usually, the bigger deals are very complicated and they require a lot of work to package them properly. Because if you don't package the loan the right way, the loan will get denied because the underwriter doesn't like the way you submitted it, right? So that's how I started in the business, just trying to figure out what was going on. And then from there, went into development, real estate development, home building, construction. So.
Okay. And so what got you to change from, just working on, almost like the deals and then basically go into development?
Well, because they're kind of hand in hand, right? It's kind of like if you look at like a grocery store, they sell goods and services, and I'm sure you see this in Canada too, that some grocery stores start to manufacture their own products.
Yep.
So because it's like, well, I'm over here selling cookies, but then I'm selling that for craft. I want to make my own cookie because I can have more margin, more profit. So, okay, I'm doing the loan and I'm seeing the builder's making 30%. Okay, I should be doing the building too, right? I see that the customer needs insurance. I see the customer needs title policy. Okay, I see how the whole business works now. So it's kind of like Amazon, Jeff Bezos, where you try to monopolize the market and grab as much as you can to keep the customer sticky with you.
And did you have any experience with that before? How were you able to?
No, I didn't. I had to hire, obviously I consulted with many contractors, many builders, many developers, and had to partner up. I knew nothing about construction. So I admire it very much, but I knew nothing about it.
Yeah, that makes a lot of sense. And today, do you own your own properties now where you're at with the career?
Yeah. I mean, so today, that's 2005. So today is 2020. And so now the company, we have over 1,200 units that we own, multifamily, developments, hotels, things like that. And through our syndications with our partners. So fast forward, 15 years. And so right now our core business is lending commercial and residential lending nationwide on bank loans and private hard money loans. And then we do our residential and commercial development.
And what has been like the starting point from going from 1 to 1,200? Like, how were you able to scale that?
Well, I mean, so the mortgage business has always been our core business, and we took the profits from that to invest into these developments, right? Whether we purchased existing real estate or we did value add or ground up construction. And once it started to get momentum with our own capital, we attracted other investors, right? And we have a private equity fund where investors, like let's say you or other people that you know, let me give you an example of a deal that we did. It was a $5 million multifamily apartment complex, and the bank wants $2 million down, and 7 partners put the money together for the $2 million to purchase this, and it has a 12% cap rate. So we create a limited partnership for that particular asset, and then the partners own that, and they collect the returns and the profits, and so that happens multiplied times 10, right? And then you create a separate fund, and then you can earn your 12% annually, and if we ever sell the property, you capture the profits, your percentage. If we ever refinance and cash out, the investors get the cash out equity.
And how do you estimate what a good deal is for you?
Yeah, I mean, so that's a great question. So obviously, the most important things for us is it depends on what we're doing, whether if we're doing a value add or we're doing a purchasing an existing property. I'll tell you right now, it's very hard to find good deals that are existing. I don't know how it is in Canada. I have not done any investing in Canada, but usually everyone's chasing the same thing. So you have to find either build your own ground up construction,
okay,
or find value add properties, distressed properties that need repair or rehab.
Yeah.
And so what's usually helped us a lot is doing Class B and Class C type investments that need rehab. And then, so let me give you an example. We'll buy things that, I'll give, one that's for its purchase price is $3 million. It needs $800,000 in rehab. It's a Class C multifamily, but the ARV is like $7 million, and it has a cap rate of like 13%. And so we'll purchase something like that with hard money loan, and do it with no money down because of how much equity's in it. We'll fix it up, lease it out, 90% occupancy, and then we'll refinance it with a Fannie Mae, a government loan with a low interest rate, like at 3.5%, and then cash out all of the equity, and then have a very low rate, and then make good profits on it. So that's a good strategy to build wealth quickly. So versus Class A properties, they're beautiful, but they usually don't have a high cap rate. They're nice and everything. And there's obviously a market for that. The other thing I think is really good right now is looking at different sectors like student housing, senior living, mobile home parks, just finding a niche and then going with it. Not just multifamily, but I like senior living a lot.
Okay.
Near the university, student housing. So it just depends on what your strategy is with your partners.
And like, talk to me about when you said building your own. Like, what's the advantage to building your own?
Well, I mean, just think about it. Like, if you could buy land, you could design it the way you want to, then you could build something brand new and have essentially a better location, a better cost per door, versus, well, if you're looking to purchase existing REO and they're not in desirable locations, because if you're an investor, you're trying to allocate capital efficiently and get a high ROI. There's not a lot of stuff on the market, so that's good. Mm-hmm. Everyone's kind of picked through it, right? So, and so you have to either you have to have connections with brokers that have off-market stuff. Like in Canada, I'm sure they have brokers that have off-market listings because everything is online. You're competing with some of the most sophisticated investors to find properties, and they probably have more money than you and I. So they're going to get the best deals. So if you could do, ground up construction, you have a little bit better edge because you can be the builder, the developer, and then kind of make it your own signature. And so, and obviously if this is your first time doing this, maybe that's a little overwhelming, but something you definitely want to kind of go into, and so in the long term, if you look at any of these companies or people that have really made a name for themselves, that's the direction they went.
That's interesting. So, but what's the upfront cost? Would the upfront cost be higher or lower than just buying something that already exists?
No, that's what that. So the loan is the upfront cost on the loan side is the same. You put like 25% down. So you're basically, let's say that you're going to build a multifamily senior living for $10 million. And you do a construction loan, you put $2.5 million down. It'd be virtually the same. The only thing is that the bank's not going to give a new person a construction loan for $10 million. You have to have a partner that has a lot of experience, or a builder or somebody of record that has a lot of experience.
Would you buy the land first without knowing what you're going to put on it, or would you just?
No, absolutely not. Absolutely not.
Okay.
I mean, it has to be very methodical, very thought out. You have to have a very good business plan, because you have to make sure that land's going to work for your development.
Yeah, that makes sense. And so, like, the way you are able to get so much, is it because you're just refinancing on the ones that you own? Like, let's say you have like 2 or 3, you refinance them to get to the next one, or you're stacking up cash on the side to get to the next deal?
It depends. No, I mean, so like, let's say that because the company keeps making money, and let's say I'll give you an example. We had one that we owned for 10 years and ended up having, after that 10 years, we paid down the loan significantly. And then, so we cashed out of it and took $3 million out to give to the partners. So we took that $3 million to go and do another deal. Right. And every single month you have cash flow coming in. So with the cash flow coming in, you can take that money and redeploy it to another deal. Right. So it usually what's happening is that once you kind of get going, then you attract more and more people. Right. So more investors want to get involved and say, hey, look, this guy knows what he's doing. We want to be involved with your projects, Angelo. So we want to here's some more money. And so once you get a name and you get going, then you can always attract more money. It's always in the beginning, people don't know who you are, or they don't know what's going on, and they don't want to give you any money. But after you get established and you get a name for yourself, then you can easily attract money to go to the next deal. And what ends up happening sometimes, like now on my deals, I only put like 10% into it, and the investors will put in the rest of the money. So you can keep scaling it. That's how we've got to so many units that we have now. You see, in the beginning, I had to put all my money, and now you don't have to do that over time.
So that would be the best strategy for you, right?
Because I can get to more units and still, collect the management fees and operate them.
And how many investors are you talking about when you do these deals?
Usually it depends on the size of it. Ideally one investor per project, but as many as 5 on a deal. I mean, it just depends. I mean, ideally one investor is preferred.
So, I mean, I guess the question I'm asking is maybe not the investors, but I guess the people putting in the money into the deal.
Yeah, that's what I'm referring to. That's
okay.
Yeah.
Okay.
So that would be ideally one person.
Okay. So they have to be pretty liquid then if you're only putting 10%.
Yeah. Well, yeah. I mean, so you can get. I mean, ideally in the beginning, friends and family, colleagues, and then after that, you can go to institutional equity. Like Wall Street provides equity too.
But what's the advantage for the investor if you're only putting 10% and you're like, I'm guessing you're the investor in a sense, or not, or are you just finding the deal?
So I'm the investor, and I'm also the guarantor of operating and managing the property. So I'm managing the property, the operator. They're getting preferred returns of usually cash on cash of 8 to 10%, and they own half of the development. Okay.
And are you opening like a separate business to that account, to that property, or not?
Absolutely.
Okay.
Yeah.
So for every property, there's a new business, like a
separate
corporation,
separate
or LLC.
Yeah.
Okay. So, I mean, I'm just doing the math here. So, like, if there's 1,200 buildings or units, there's almost like one company for each, or is it stacked into the same company?
No. So
that's what I was asking.
Yeah, no. So 1,200 units. So some projects are 300 units. That's one entity. Some projects are 60 units. That's one entity. So yeah, it's not 1,200 entities.
Okay. Yeah, that makes sense. Yeah. I was just wondering because I thought that maybe since you were owning just real estate, that the business could be just a real estate business, but now it has to be different ones.
Well, you have a fund per each entity, or and then now you can always later on you can convert that into one giant entity. But it all depends on where your capital is coming from.
Okay. If it would only be your capital, then you would only have one company for it, right?
That's right.
Okay. Even if it's a different buildings.
I would still recommend doing different LLCs.
Is it because that they're seen as like different businesses, or?
Well, there's a lot of reasons. I mean, you have to have different bank accounts.
Yeah.
You don't want to cross the liability. What if one of the tenants on property A slips and breaks his neck and he wants to sue your whole company now?
Okay, yeah, that's true. Yeah.
You want to separate everything out. What if the partners in B want to sue you in partner C and take some of the properties? There's a lot of stuff like that can happen. So you need to separate everything out.
Okay. And for someone that would want to get started, since we're talking about more like advanced stuff, for someone that wants to get started in real estate, like what sort of advice would you give to them?
So it's a great question. And we've actually, I think the biggest thing is you have to get the knowledge, the expert knowledge. We built a platform called Real Estate University. It's an online platform for people such as yourself that want to learn about real estate investing. It's realestatuniversityonline.com. Now is a great time where everyone's at home. Maybe they lost their job. They're looking for a career to learn about real estate, because it's the highest asset class in the world is real estate. So we have a special right now we're actually doing. It's usually $200 a month. Right now it's only $49 a month. And to learn all about real estate, you can do it from your phone, your tablet, but getting a mentor. It doesn't have to be from me. It could be from anybody, but learning because there's so many details and so many people fail at this. For every one success, there's 1,000 failures. And I got to commend you for trying to go and learn about it and asking people and going to the top to figure out, okay, how do I do this? What's the right way? Because the best way to do something is to grab an expert and a mentor, and that's a straight line to success versus going in loops and circles and wasting years and wasting money. you can just ask somebody that knows what's going on with the business and then have them show you the way. So we digitalized that and made an online accredited university for people to go. Like, you could literally, after you're done with me, go log in from your computer and learn how to flip properties or get a hard money loan and have access to all of that, right? So that's the whole benefit behind getting the knowledge. Now is a great time to be learning.
So what can people learn in the program?
So they can learn how to structure deals, how to negotiate, loan products and guidelines, laws. They can get their diploma, their certificate, FHA, VA, USDA, hard money loans, commercial loans, how to write contracts, how to close deals, how to flip properties. So where to get contractors, where to get capital, how to raise money.
So you're not really recommending that people just stack up their own money to go into real estate, or is there better ways?
I mean, it depends on how much money you have. It depends on how much money you make. I recommend that. Yeah, I mean, you need to save as much money as you can and make as much money as you can. But see, the thing on real estate where it's different than stocks, real estate, you usually have to have a large amount of capital. The banks are going to want 25% down. Yeah,
for sure. So just for everyone listening, do you also recommend, since I don't know more of your situation, what do you think about like houses? Do you think that people should not get houses and just focus on real estate since it's a income producing activity?
You mean a house for someone to live in, to own?
Yes.
I would say my opinion on that is, in the beginning, you can use those programs. For example, I don't know in Canada if they have the government program for first-time buyer.
Yep.
So use that for in the beginning to get started, and then later on lease those out or flip them. But you shouldn't be, in my opinion, unless you have a lot of money, you shouldn't be. Because here's what happens. I think a lot of people, they do this. They go and buy a $500,000 or $1 million home, and they put 20-30% down on that house, and they tie up all their money on their home, and they could have used that money to make millions of dollars on real estate. So it depends on where you're at in life. I would say in the beginning, if you're just starting, use the government program to buy your home, and then later on, you can lease it out. Like, for example, in America, you can use the government program to go buy a 4-unit property and lease out that property and buy the home with basically no money down. That's a smart idea, right? What's not a smart idea if you take your whole life savings to go buy your house for you and your wife, and now you're broke. So that to me is dumb. So, but if you have a lot of money and now you want to buy a home for your family and you made a lot of money and you have a good business, then that's good. But it depends on where you're at in the life cycle.
So why do you think people buy houses then?
Well, because that's the status quo. All right. It's
just because they want one door, or?
No, I think that's because that's the status quo of society. I mean, it's like, why do people go to McDonald's? I mean, it's a status quo, and so. But if you look at like really rich people, they go for the house later in the game. They don't go for that in the beginning. And there's nothing wrong with that. I mean, you're asking me my opinion. I don't have any negativity or bad opinion on somebody that wants to go buy a home for their family. If you're trying to build wealth, and you only have your capital is very precious and it's scarce. So if you're putting all your money on your home, like I see a lot of people, they put $200,000-$300,000 down on a house. They could have turned that into $1 million by investing in real estate, or stocks or whatever, buying a business. But yeah, I mean, it just depends on what it comes down to is your beliefs and your values. What do you care about? What do you value?
Yeah. That makes sense. Yeah. So tell me once again more about the real estate university. Like, how much time did that take you to build,
Yeah.
or is there people that are also part of the course, or is it just you?
No, it's available for sale for everybody. I mean, we have a ton of people that are on it, and
Okay.
it took me about 2 years to build. It's over 1,000 hours of content, and like I said, you can log in online from your phone, your computer, tablet, and just pay the monthly. It's only $49 a month. It'll take you probably about to complete the whole thing, probably 6 months. You know,
Okay.
and so it's the greatest investment, like Warren Buffett says, is learning, doubling down on your learning, investing in yourself, and getting knowledge that you can monetize off of.
Yeah, for sure. So just one final question before we end this is where can people learn more about you or connect with you?
Yeah, so obviously we have our website, officialangelochristian.com. And then they can check us out on our YouTube, Angelo Christian, or Instagram, official Angelo Christian. You can check out do all the research, check it out there. I think the biggest thing is, for people is just trying to advance and take their life to the next level. Again, it doesn't have to be anything with me, but at least we put this information out there for other people to learn so they can make their life better. Because that's all what it's about, is helping other people to progress, make their life better, to go to the highest level possible so they can become successful too.
Awesome. Well, I want to thank you for the interview, Angelo. So thank you so
Absolutely.
much.
Thank you so much, Antoine. I'm very grateful. I wish you the best success with your future, with real estate, with your show. I'm very honored to have you be on your show today. And to the future, I'd like to come back on your show and see how you're doing, check back with you in a year and see what's going on.
Yeah, for sure. Thank you.
Thank you so much. Bye-bye.
Bye-bye.
Take care. Bye-bye.